Hello and welcome to Options Guy TV. My name is Brian Overby. I am the author of the Options Playbook, and I'm going to be your host for about the next 15 minutes here on Options Guy TV. We are taping the show ahead of the holiday trading session, which is not going to be a trading session because the markets will be closed. And so I thought I would do a quick summary of the trades that we set up on Monday, give you a quick little outlook on it. The trades are doing well so far. We did a trade in the S&P 500 index, the good old SPX, and we also did a trade in gold. And we used the ETF that tracks gold prices, the good old GLD. They're both very liquid underlyings, and they're both going in the right direction. We saw gold have a very solid and strong breakout to the upside, setting an all-time high in gold prices, and that has continued today. And then we also saw that move in the SPX. So I should let you know that we are taping this show. The markets are open and rocking and rolling, and it is Tuesday, December 23rd. So if I show inside the Tradier Pro software, the first trade that I have up is the S&P 500 index long butterfly. When we put the trade together, the market was at 68.75, and right now I'm highlighting where it's at on the screen, which is 68.94 and a half. And so the market is going the right direction in that we did an open wing. We bought a wider long call spread from here to here, and that's why we sloped so much higher. And then the short spread that we used to pay for it, we stopped short on. And the short spread has this little instance right here. Now, this is as of today. So the whole prices have changed. Everything else has changed as far as that trade is concerned. We put the trade together, and when we did that trade, the market was at $3.40. So we sold. The middle strike here was pretty much at the money. We're just a little bit out of the money when we put it all together, just a little bit. And we now see that the market has gone above and beyond our strike price, and we see it trading at $5. So we put the trade on, and it expires today. And we put it on for $3.40, and we can get out at $5. We would just close the trade right now. My rule has always been when you're doing very short term or zero DTE trades, you want to be out by 2 o'clock anyways. So right now we got the market going with us in the right direction, and the market's doing great. Now, here's one other thing about the trade though. If you're watching it, if you put this trade on and you're willing to stick around and watch every minute of the marketplace, the market is now all the way up here. And we don't really get hurt if the market comes back down. Now, I'm highlighting inside the what if calculator where the market is at, and I'm showing that at the end of the day today, and it's cash settled in the S&P 500 index, if the market drifts down, it could land right here, right at our middle strike, the 6880, 6,880, and we could actually make more on the trade. So right now the risk is very low that it's going to go blow through the strikes and go all the way to the downside. So now so in other words, I guess what I'm saying is I would normally just close it out on any given day. At this point in time, if I put this on for 340 and I could sell it for 5, that was basically what our outlook was to start with. We made our capital, we made our gain, close it out, move on. But if you did stick around, this is the right direction, right? If the market's hanging right in here, you just close it right now. If the market's staying at the precipice and you got the risk to the downside, at the peak of the mountain, if you will, then you would just close. But we're up here. So what are the risk of it blowing all the way down, going through your short strike and coming all the way down to here where you lose the initial investment, which was $340. And that happens without you being able to get out. So I don't mind hanging in the trade. And this is part of the reason why I like the open wing butterfly more than the standard butterfly. So very good trade in the SPX. We rode the momentum, riding it into the holiday. pay for some Christmas gifts, if you will, but that trade is looking solid, and on to the next. So we look at the GLD long butterfly, and that's also an open wing. And our profit and loss graph isn't looking too beautiful, but well, it didn't turn out that way, but the trade is doing really well. So I'm going to send this to Ticket. We're up a little bit on that trade. We need the quotes to catch up here. 228 is where the market is at. We put this trade on for around 190. It was jumping around. It depends on where I grabbed the screenshot. But I looked at the video yesterday, and it looks like about 190 is what we could have got this trade for. We went out further. We're going out to December 31st. That's the expiration date. So we still got a few more days in this trade. But the market is up. Once again, we're going towards the upside. We got the market trading at 411, and same scenario. We really don't get hurt if the market comes back down. We're up a little bit. We need time decay. In the SPX, we did a 2-day trade on a very expensive index, and we gained a lot of time decay. We've made a lot of money just by the fact that 24 hours has gone away. We need about 3 or 4 more days to capture some of that time decay, and we're not at risk here. Now, if the market came back, let's say, early next week and started trading at this level, well, once again, you're going to have the same scenario. You've got the risk that it could break down to the downside and you could lose your entire investment. But if it hangs right in this area and moves higher, we're fine. So if it ends up at the end of the day today trading somewhere up here, we're even better on that situation. And so in our scenario, we put it on for 190. We could close it for 225. We're not going to do that. We're going to stick around and let this trade play out. And we're very happy that it moved in the right direction. That's it for this episode of Options Guy TV. Have a very, very merry one. And we'll see you sometime between Christmas and New Year. We're going to be doing some educational pieces, but I'll probably pop in for a live show, see where the gold trade is at, and maybe look at a new trade heading into the new year and trading through the Santa Claus rally. At least that's when it's supposed to happen, between Christmas and New Year. So that's the quoted week of the market, where they say a lot of hedge fund traders are adjusting their positions, and the market usually has a positive spin. But there's been many years that have disproved that. So always be careful out there, and we'll see you next week at some point in time. Thanks for stopping in.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.